Hello everyone, welcome to today's Fundamentals. Hello Peter.
Hello.
So Peter, how has the FX market been behaving?
Well, we had rather low volatility. It continued since the day before yesterday as well. The US dollar remained relatively stable. There was one exception though, as JPY strengthened against the US dollar. Other than that, I think that the market maintains a wait-and-see position ahead of the release of the US CPI rates today. Now, the rates are expected to slow down from 7.1% year-on-year to 6.5% year-on-year. That's the headline rate. And such a slowdown would practically signal a retreat of inflationary pressures within the US economy. At the same time, it would solidify market expectations for a possible easing of the Fed's aggressive hawkish stance. And I think that should the rates slow down even more than expected, we may see the US dollar losing some ground, while should they fail to slow down as expected, we may see the USD gaining some slight support here. I would be noting though that the importance of the CPI rates is enhanced, especially after the release of the employment data for December, which was on Friday. And we had employment data which showed a rather tight employment market. So given that the Fed has a dual mandate, it has to promote maximum employment and at the same time keep inflation at bay. So the employment market is a green light for the Fed, while the next test, the CPI rates, are to be showing us what's happening with inflation. Even should the CPI rate slow down to 6.5%, they're still substantially higher than the Fed's target, which is 2%. And I think the Fed's hawkishness is going to continue, but we may see an actual easing here.
And how about the US stock markets?
US stock markets driven exactly by the same fundamentals, the CPI rates, more or less jumped. And it was characteristic that the improvement of the market sentiment more or less was caused by the expectations of the market for an easing of the Fed's hawkish aggressive stance. I would be noting though that US stock markets are about to get busy. Today's CPI rates for US stock markets is a stop before the kickoff of the earnings season, which is tomorrow. We have a number of large banks, Wells Fargo, JP Morgan, Citigroup, if I'm correct, which are to release the earnings reports tomorrow. So attention is expected to start shifting after the release of the CPI rates from the FX market towards the US stock markets. So it's going to be an interesting period in the next couple of weeks, I think, which may increase volatility.
And back in the FX market, you mentioned that JPY jumped yesterday, correct?
Yep. The main reason here, it seems that there was a report released maybe late in the American session, early Asian session today, which mentioned that BOJ may review the side effects of its ultra-loose monetary policy in its next meeting. Now, such a review may imply a further hawkish tweak after practically BOJ has raised already the yield curve control to 0.5%, if I'm correct, for Japanese government bonds. So the report as such tended to imply that we may see another hawkish tweak. I wouldn't expect much, but the possibility is there. I would expect a more substantial turn of BOJ more or less in April, most probably Q2, as current BOJ Governor Kuroda is about to step down.
Didn't Australia release also its trading data for November during today's Asian session?
Yes, and we had an improvement, a widening of the trade surplus of Australia. That was for November, which was unexpected. Actually, the trade surplus was expected to narrow, and it didn't. It was on the rise. it showed that more or less Australia was benefiting from its international trading activities over the month of November. The interesting part is that the Aussie did not actually jump on the release. On the contrary, it remained rather stable. It seems that attention was shifted away from the release as such. And I think, though, that on a macro level, the release of an improved trade surplus, a widened trade surplus, is another plus for the Australian economy, given that we had also an acceleration of the CPI rates on a month-to-month basis for November, as well as an acceleration of the retail sales for the same month. So overall, all these three releases could be supporting the idea for a more hawkish shift in RBA's monetary policy.
And how have the oil prices been behaving?
That was the second surprise of the day yesterday. We had yesterday the release of the EIA crude oil inventories figure, which showed another substantial increase of US oil inventories, and was a huge one, and the second after AP. But oil prices, instead of the implied slack in the US oil market, instead of dropping, they rose. And main reason seemed to be affected by China. There were speculation that China's demand is going to be increased. And some analysts have even mentioned that the new Lunar Year festivities, alongside with the reopening of China, are going to be increasing the demand for oil from China, at least in the short term.
And what's in the calendar for today, Peter?
Well, we already had the release of Norway's GDP rate. There were for November, there was a slight acceleration, a positive for the NOK. We already mentioned the US CPI rates for December. In the American session, I would also be noting the release of the initial jobless claims figure. It's expected to rise and reach 215K. Should that be the case, that could imply a small crack, another small crack in the US employment market. Other than that, I would be noting definitely on the monetary front, we have some comments from Fed policymakers, which I would be noting Philadelphia Fed President Harker. And I would be noting St. Louis Fed President Barkin, which is a well-known hawk. Harker is due to speak tomorrow. And should Barkin actually show some more hawkish intentions about raising interest rates more and for a prolonged period, we may see the US dollar getting some support. Also, St. Louis Fed President Bullard is speaking, he's also hawk. So we may be seeing here a double hit, which could support the US dollar. But the main focus remains on the CPI rates for now. Other than that, during tomorrow's Asian session, we are going to be getting from China the trade data. Definitely the trade surplus is to be the key figure, but I think that Aussie traders will be more looking into the import growth rate, given that Australia has a high amount of exports of raw materials from Australia to China. So should Chinese imports be on the rise, which is not to be the case, it's not expected at least for the time being, that could provide some substantial support for the Aussie.
Great. Thank you, Peter, for your time. And everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So, welcome to the technical analysis part of the presentation for today. My name is Peter Yosef, Senior Market Analyst at IronFX. In front of your screens, you have the US dollar index. It's the 4-hour chart. Mind you that all charts to be presented are to be of the same time frame, i.e. the 4-hour time frame, unless otherwise stated. Now, with no time to waste, observe that the US dollar index has maintained its sideways motion just below the 103.05 resistance line. We tend to maintain the bias for the sideways motion to continue. There is a catch here, and it's in the RSI indicator, which has been dropping, and it's actually right now below the reading of 50 at 38.07, pretty low, which tends to imply a residue of bearish sentiment in the market. Should the bears actually take over, say for example in the case that the US CPI rates slow down more than expected, that could drive the US dollar lower, the index, probably breaking the 102.10 support line, start aiming for the 101.30, if not even lower. On the flip side, should the bulls take over, we may see the price action rising, breaking the 103.05 clearly this time, and start aiming for the 104.55. Let's have a look also at EURUSD. Let's readjust the chart a little bit. Locking everything in. That's it. Now we see EURUSD having some very, very slight bullish tendencies. I would be noting that the RSI indicator remains just below the reading of 70. Actually, that's pretty high, so that's supporting the idea of a bullish sentiment. But for the time being, and as long as the price action remains in this sideways manner, we tend to maintain our bias for a sideways movement to continue. I would expect that should the bulls take over, we may see the price action rising. Sorry. Aiming, if not even breaching the 1.0935 resistance line. On the other hand, should the bears take over, we may see the price action dropping, breaking the 1.0730, and start aiming for the 1.0580. Mind you that the Bollinger Bands have converged, narrowed. That's another indication of the low volatility characterizing the pair. And I think that should that low volatility continue, we may see the sideways price action being allowed to continue. Sorry. Once again, though, we highlight the release of the US CPI rates, which, depending on the actual rates, we may see some volatility for the pair as well, mostly on the USD side. Let's have a look at cable. Some slight readjustment necessary here as well. The labels. Once again, we observe that there is relatively low volatility if compared to the past price action of the pair. It's characteristic how the Bollinger Bands have converged once again. We tend to maintain our bias for the sideways motion below the 1.2220 resistance line to continue. On the other hand, though, should the bulls take over, given that we have an RSI indicator, which is slightly above the reading of 50, it's actually at 58 right now. Should the bulls take over, we may see the price action rising, breaking their 1.2220, and start aiming for the 1.2345, a level which was tested beautifully here at this peak. Note how the upward motion was practically reversed after a couple of tries, and nice downward motion here, breaking all the way down to below the 1.2220. And note that the big picture, the pair has maintained a sideways motion between the 1.2220 and the 1.19. For the time being, though, for the past 48 hours, the pair has remained closer to the R1, yet in a very narrow range bound movement. Should the bears take over, we may see the price action dropping, and possibly a clear break of the 1.19 support line would be required in this case, even breaking below, or if you prefer, a lower true than this one here. So I would like to see cable landing somewhere here before actually calling in the bears. Okay, let's move to USD JPY. USD JPY, which dropped during today's Asian session. Would like to have a look at the minute chart here and see whether there was a specific hour where we had a substantial drop. Oh yeah, this was it. And that was at around 8:15 Cyprus time, that's GMT +2. So we can see a huge volatility at the release of the report we have mentioned of around 41 pips. That was substantial. The pair recovered, corrected lower. I think this would be the moment where it started to decisively move lower, and that would be around almost 1 o'clock Cyprus time, GMT +2. Note how it dropped below the 131.80, and it was even tested to the upside as a resistance line. So we had a correction, false break here for about quarter of an hour, but then again, once again below the 131.80. And that turns practically the 131.80 back to the 4-hour chart from a support line to resistance line. Let's make the correction. Let's go hunting for a new ultimate support line. Okay, I think this is too close to the price action right now. Okay, this is better. It's more decisive. And here we are. I would be placing the ultimate support line practically on this true here. Mind you, it was tested also to the upside. Seems legit. In green, please. And that would be the 124.75 support line. Locking this in, readjusting the chart, and let's correct also the labels. So the R3 now is being set at 135.80. The R2 at 133.90. The R1 at 131.80. The S1 at 129.30. The S2 at 127. And the S3 at 124.75. Okay. Now the next big question here is, what's the direction? You can see that the downward motion initially seemed to be a once-off, but we see that JPY strengthened even further during today's European session. You can see the second red candlestick right here. Also note that the RSI indicator, which is pretty low, it's at 37, sorry, may imply that there is a bearish sentiment here and it's dropping. So it has the potential to go even lower. Should the bears take over, I wouldn't be surprised to see the price action aiming, if not breaching, the 129.30 support line, a level which was aimed for practically at the beginning of the month. A move lower is also possible. However, for such a move, I think that the US CPI rates will have to slow more than expected, practically sinking the US dollar even lower. And that would allow USD JPY to drop below the 129.30 and start aiming for the 127. On the other hand, should the bulls take over, we may see a correction higher. And the breaking of the 131.80 resistance line, and the path to start aiming for the 133.90. Another small catch to note is this here. See how the price action dropped and has hit the lower Bollinger Band before stabilizing somewhat. And that's an indication that there has to be, or if you prefer, some room has to be created for another bearish movement. It seems like the low Bollinger Band is holding right now the price action from actually sinking even lower. But the bearish sentiment, I think it's still there and could drive USD JPY even lower. Okay, let's move now to, before we move though, see how the moving averages, the 100 in orange, the 50 in green, and the 20 in blue. And note how the blue one has dropped below, has made a cross to the downside, has dropped below the 50 moving average. That exactly mirrors the acceleration of the bearish tendencies for the pair. Okay, let's move to USD CHF. USD CHF, which had a reverse movement. Let me readjust the labels once again. USD CHF is an interesting pair, or at least it had an interesting movement. And let me explain why. Number one, USD CHF did not drop. US dollar was rather weak. And nevertheless, CHF proved to be even weaker. So practically, it allowed the pair to rise, yet at the same time, it did not allow it to surpass the 0.9330. The RSI indicator is a little bit higher than the reading of 50. It's actually right now at, it's at 61, which is not bad. There may be a residue of a bullish sentiment left here. On the other hand, though, we have to highlight that the main body of the price action since around mid-December, the 13th of December actually, has been between the 0.9330 resistance line and the 0.9210. It would be something like a channel movement. Let me show it. Channel being here. And here. There were two exceptions, but both proved to be false breaks. And the one would be here. And the second would be here. It almost resembles a double top, doesn't it? And dropped lower, corrected higher. And it's kind of testing once again the upper boundary of the sideways motion that the pair had for the past month. It's characteristic how the main body of the price action remains between the R1 and the S1. Now, I would require a clear breaking of the 1 before actually switching my bias for a sideways movement in favor of a bullish outlook, maybe even a testing of the 0.9450. So the rise for the time being is not enough, but the constant testing of the R1 and the fact that the RSI indicator has reached at 61.5 more or less tends to imply that there are still some bullish sentiment left in the market for the pair. On the other hand, should the bears take over, we may see the price action reversing direction, dropping. I would require a breaking of the 0.9210, the price action of UCCHF to start aiming for the 0.9090 before calling in the bears. Let's have a look at the Aussie. Okay. Let's correct the labels a little bit so that we have I think a clearer picture here. You can see that the price action of AUD/USD has been in a rather tight range-bound movement. No major surprises here. And that's been since the since the 9th of January. Of course, we had the weekend in between. So overall, I think that the stability of the pair has been underscored also by the narrowing of the Bollinger Bands, implying low volatility. The RSI indicator is above the reading of 50, yet remains pretty close to it. It's right now at 55. And I think that tends to imply also sideways motion. So for the time being, we tend to maintain our bias for the sideways motion to continue, just above the 0.6880 support line. Should the bulls take over, given that we have also an upward trend line, see how the moving averages are also supporting the idea of a sideways of an upward motion. as they have an upward slope, the 50, the 100. Now, should the bulls take over, we may see the price action rising, breaking the 0.7005 and start aiming for higher grounds. While on the flip side, for a bearish outlook, I would require clear breaking of the 0.6880, not just a simple testing like here or here, but a clear break downwards, and the pair to start aiming for 0.6740. Let's have a look at USD CAD. Here you are. Now we can see that the price action had a wide sideways movement from around the 6th of December up until the 6th of January. So that was for a month of price action and sideways motion. Yet there was a clear downward movement on the 6th of January of this month, which even dropped the pair below the S1 1.3395, yet the price action recovered, and since the 10th of the month maintained a sideways motion just above the support line. So we tend to maintain the bias for a sideways motion to continue. I think that if we drill in to the 1 hour chart, that would become more clear. Here it is. Note how the Bollinger Bands have narrowed. It's a very tight range bound movement here. The RSI indicator here is running along the reading of 50. So that tends to also imply that the sideways motion is to continue for the time being. Back to the 4 hour chart. Also, we have the RSI indicator in the 4 hour chart running just below the reading of 50, also implying a sideways motion to continue. So overall, the fact that the Bollinger Bands have narrowed, have converged, the fact that the price action since the 10th of the month remains range bound, that the RSI indicator is running along the reading of 50 just below it, but still running along, all of that tends to imply that the sideways motion of the pair is to continue. But I think that USD CAD may prove to be maybe a little bit more sensitive to the release of the US CPI rates today. And should the rates slow down more than expected, we may see the pair dropping. In which case, should the bears get the chance and take over the direction, we may see the price action of USD CAD dropping, breaking the 1.3395 and start aiming for the 1.3230. On the other hand, should the bulls take over, we may see the price action rising, testing if not even breaching the 1.3525. Sorry. Okay, let's have a look at Kiwi. NZD-USD. Let's readjust the levels as well. So NZD-USD has been moving in a sideways motion. I think that's clear. There is a slight disagreement here with the boys up in research, where they're suggesting that some bearish tendencies are present, and to support that notion, they're drilling into the 1 hour chart. And note that the pair is slowly but steadily creating lower peaks and lower troughs. I see the case, but from my opinion, that's still not satisfactory. But that's a valid comment in my opinion. Nevertheless, for the time being, we tend to maintain a bias for a sideways motion to continue. I would require for a bearish outlook the price action to drop, break the 0.63 support line, and start aiming for 0.6155. On the flip side, should the bulls take over, we may see the price action reversing direction, breaking the 0.6440, and start aiming for 0.6570. Once again, though, in my opinion, the sideways motion of the pair for since the 9th of January, one. The fact that the RSI indicator is at the reading of 50 right now, and the fact that the Bollinger Bands have converged and narrowed, all of that tends to imply that the sideways motion most probably will be continuing. Once again, though, sorry, I think that the release of the USD pair rates may create some volatility for the pair and change its direction, depending on the actual rates, which are to be released later today. Let's have a look at gold. Here we are. Gold, which has been on the rise. And interestingly enough, seems to have broken the 1880. For the time being, I'm going to be also highlighting the fact that there has been a sideways motion for the precious metals price since the 9th of the month, with the price action revolving around the 1880. But I would be changing this into a support line, at least for the time being, given that the price action is above it. Let's go hunting for a new resistance line. Be choosing this peak here in red. That's the 2070 resistance level. Let's readjust. Let's correct those to the labels. I find it fascinating how more or less all the trading instruments we have just watched have this narrow range bound movement, which is indicative of the market's wait and see position. And it's something that, as if everybody's waiting for something to break out and actually create mayhem in the markets. And the release of the UC pair rates today may be providing just that. There are two to be placed at 2000, and there are three at 2070. A little bit off, I know, proportionately high, maybe, but I'm not so interested in how symmetric the chart and the resistance support lines are. My main concern is that should the bulls maintain control or actually start pushing gold's price higher, we may see the price action reaching, most probably breaching even the 1920. That would be $40, almost $40 higher per ounce. And in such a case, the way is paved for the 2000 resistance level. On the other hand, should the best take over, we may see the price action dropping, breaking clearly the 1880 once again, breaking the upward trend line, and aim, if not even reach, the 1824. For the time being though, the sideways motion is expected to continue, with the price action revolving around the 1880. Mind you that gold may prove sensitive once again to the release of the US CPI rates, and it was very, very clearly demonstrated in our gold report on Tuesday how that could happen, which more or less could create higher volatility for gold's price in the American session today. Let's have a look at oil. Oil, which was on the rise, it's very, very interesting. Has even broken above the 78 resistance line, a level which provided resistance a number of times in the past 24 hours. It becomes more clear if we drill out to the 1 hour chart. You can see here the tests and the sideways movement of the commodity. And this clear break upwards, it's very, very indicative of the intentions of the market for WTI. We have mentioned that even despite, back to the 4 hour chart, even despite 2 consecutive reports on Tuesday and on Wednesday showing a substantial rise in US oil inventories and the slack being implied in the US oil market, we would expect actually oil prices to drop. They didn't. They rose. And definitely the Chinese reopening could be involved here, as it would increase the expectations of the market for higher demand for black gold. Let's go hunting now for a new ultimate resistance line. And I think we found it at this peak here in red. That would be the 92.85. Readjusting. Let's correct the labels. S3 being placed at 70.30. S2 at 73.60. S1 at 78. R1 at 83.20. R2 at 89. And the final resistance line, R3 at 92.85. Pretty high. Sorry. Let's lock everything in. So the price action of WTI has risen, has broken the 78 support line. The RSI indicator is rising, and it's actually pretty near to the reading of 70. It's actually at 66 right now. All of that in conjunction with the fact that the price action has reached and is constantly testing the upper Bollinger Band tends to imply that we have to switch our sideways movement bias in favor of a bullish outlook. And I wouldn't be surprised to see the price action start decisively aiming for the reading of 83.20. On the other hand, should the market get some cold feet here, actually the bulls, we may see a stabilization, and the commodities price may continue revolving around or just above the S178 support line. Should the bears take over, we may see the price action dropping, breaking the 78 support line, yet I would require clear breaking, even a testing of the 73.60 support level before actually calling in the bears here. Let's have a look also at US stock markets. I would take a look at Dow Jones. I think that the index has been reaching a make or break position here. Note how the futures contract practically has been stabilizing in the European session today, testing the upward trend line. On the other hand, we have also an RSI indicator which is at the reading of 70, implying a bullish sentiment in the market for the index. I think that should the CPI rates slow down more than expected, we may see Dow Jones rallying, breaking the 34,275 resistance line and start aiming for 35,500. On the other hand, should the index remain rather stable, as a first sign of a change of trend, I would be expecting to see that the price action breaks clearly the upward trend line, yet remains between the 34,275 and the 33,460. For a bearish outlook, I would require clear breaking of the 33,460 and the price action to start aiming, or at least the way to be paved for the 32,500 support base. Google chart, also interesting that it's in a make or break position here. Let's have a look at Nasdaq. I think it was more indicative. Yep, it is. Nasdaq, which finally was able to break above the 11,300 resistance line, clearly now, and stabilized higher. The RSI indicator is above the reading of 70. It's actually right now at 71.5. So there is a bullish sentiment. Yet the market, or if you prefer the bulls, may have reached a little bit too far here. For the time being though, let's correct the label, the support and resistance lines, as well as the label. I'm taking this double peak here. And that would be in red. $12,450. Let's readjust the chart, the label, sorry. I think that the bullish sentiment is still present and could drive Nasdaq higher, but the stabilization tends to create some doubts here. On the other hand, the RSI indicator, which is very high, tends to imply that the pair has still some, the index has still some way to move higher. The fact that the price action has hit the upper Bollinger Band, on the other hand, tends to imply that some stabilization, more stabilization is required. I think at the end of the day, it's going to be judged on a fundamental level by the release of the US CPI rates for December. So that should be it. Locking everything in. For the time being, we tend to maintain a bullish outlook for Nasdaq, but a small warning here. We may see a correction lower. But once again, at the end of the day, I think that the main issue is probably going to be in the release of the US CPI rates for the day. that should be it from IronFX, from all of us here. Best wishes for solid trading.
Hello everyone! The term risk-off refers to the mood of traders and investors in the financial market when they want to avoid risk exposure and safeguard their funds. When traders are pessimistic about the economic outlook, they tend to sell risky assets and buy safe haven assets. In such an environment, safe haven assets like the Japanese yen and gold tend to gain in value, while high-risk assets like stocks and commodities tend to decline. Markets are frequently labeled as risk-on or risk-off. Both of them express global market sentiment. Risk-on, risk-off is frequently abbreviated as RORO. This happens when price behavior is driven by investors and traders' changes in their risk tolerance. When traders are not optimistic, then they tend to reduce leverage, selling risky assets and buying safer assets or even preferring cash. US Treasuries and German bonds are considered almost risk-free. The US dollar, Japanese yen, and the Swiss franc are safe havens and tend to rally when traders want safety during times of uncertainty. The price of gold usually increases and the yield on government bonds falls. Thank you so much for watching us today, guys. Stay tuned. Bye-bye.
Okay, thank you. Okay, cool. So I was just about to get to the disclaimer and I see more of you joining. Disclaimer, any information that we share in this webinar should not be construed as trading advice or investment advice. Okay, this is purely educational only. These webinars are brought to you by IronFX to help you guys grow your grow in trading. This material is just for personal opinion of the author, and the client's investment objective and risk tolerance have not been considered. Okay, so please be cautious, especially if you are new to trading. Okay, cool. I'm going to start the webinar proper. Okay, let's start by letting me introduce myself. My name is Cassandra, or you guys can call me Cass. I am a trade analyst and a prop trader at Everest Fortune Group. Okay, so Everest Fortune Group is an award-winning research firm. Okay, we advise brokerages, banks. We do podcasts, we do radio. Basically, we do a lot of research on the financial markets, and we specialize in technical analysis. So we are the finalists for the best Forex research and best equity research for 2019, 2020, 2021, and 2022 is not out yet. Okay, so we are the finalists for years in a row. You guys are in good hands. Okay, that's why IronFX brought us in to do this webinars for you guys. Okay, another thing about myself in terms of trading, I want to share my experience with you guys. So I've been trading for a few years now, and I think the most memorable or important achievement I have done in trading is that I have passed my Forex fund and FTMO for a total number of 6 times. Okay, for those who don't know what these are prop trading tests. These prop trading tests requires a trader to be in profit of 8 to 10% within a month. Okay, so within 1 month, you need to bring in a profit of 8 to 10%. Hey, Carlos, welcome to our webinar. Okay, 8 to 10% consistently without a drawdown of 5% to pass the test. So I passed this test 6 times, and I am currently taking test number 7. Hopefully I pass test number 7 as well. Okay, so whatever I share with you guys is basically my style of trading, however I trade and how I get my 8 to 10% within the month. Okay, I'm not sharing anything that I don't use. Okay, so again, don't be shy, ask if you are confused. Okay, so agenda for today, we've got what are trend lines? What do you use trend lines? How do you use trend lines effectively? What time frame do you use trend lines on? And how do you use channels? And let's put them into a strategy. Okay, so once we cover the topic for today, which is basically trend lines and channels, okay, we are going to move on to trading view if we have time, of course. I mean, most of the time we do have time. We're going to move into trading view, and I will show you exactly how to apply whatever we learned today, because learning is one thing, but knowing how to apply is a totally different thing. Okay, so let's start with what are trend lines. Can you guys let me know in the chat box if you guys have ever used trend lines before, and if this trend line is familiar to you? Okay, we've got some answers coming in. Yes, you used trend line before. This is a downwards trend line. Okay, this looks, I have another question. The question is this trend line drawn properly? For those who have used a trend line before, is this trend line drawn properly? Okay, that's right. Okay, this trend line is not drawn properly because why? This is a descending trend line. A descending trend line should be drawn on top, and an ascending trend line, which is a trend line that is going up, should be drawn at the bottom. Okay, so this is drawn at the bottom of a descending trend line. This is not the best way to draw a trend line. This is not the way I would do it. Okay, so let's move on. I'll eventually show you the correct way. So a trend line on the minimal, okay, on a minimal needs 3 touches. Okay, so 1, 2, 3, 4, 5, 6. 6 touches in this example. But on a minimal, when you are plotting your trend line, it needs to have at least 3 touches. If it's less than 3 touches, it is not a valid trend line, and you should not be using that as a guide or a reference. Okay, on a minimal, it should be at least 3 touches. Okay, so the next question is, how do we plot a trend line? Is it with the wick or without the wick? By the way, the whole point of a trend line is to tell you where trend is going. It's either uptrend or downtrend. That's basically it. It's basically an uptrend or a downtrend. Okay. We will be going to the trading. We will be going to trading view. We'll be going to different charts, and we'll be identifying trends. Okay. Whenever we cover a topic, I want to practice. Spend more time practicing, because I think it's so important. Like, we can learn about trend lines, we can learn about channels, but if you don't know how to spot it on the charts, your today's session will still not be that helpful to you. Okay, so wick or no wick, it doesn't matter. You can use the body of the candle here, or you can use the wick as a reference. Okay, here at Everyone's Fortune Group, we try, okay? It's not every time, but we try to use wick to wick to wick, okay? And I'll show you why later when we go to TradingView. Okay, so what time frame do you use trend lines on? Can you guys let me know what time frames do you guys usually use your trend line on? Okay, 1 hour, 4 hours daily. Okay, there's no right or wrong answers here. Why? Because you can use a trend line on all time frames. Okay, so you can use the trend line on all time frames. Okay, so in this case, we're using it. This is what it looks like on the 30 minutes, and this is what it will look like on the 15 minutes. Okay, so that's why when we are plotting the trend line, we try to take the highest point of the wick. We try, okay, sometimes the chart won't allow us. We try to take the highest point of the wick. Why? So that when we go to different time frames, we can see that it is touching the highest end of the wick as well, and your trend line is still valid on those time frames. Okay, so let's recap a little before I move into the channel. Today's topic is very short. Okay, don't worry. It is a short topic, but more importantly, is later when we move into TradingView to do the practice. Okay, to do the practice. I think it'll be helpful if you guys interact with the practice session, because it will really help you a lot in identifying the trend line. Okay, so let's go through what we have just learned about the trend line. Number one, what is a trend line for? The trend line is used to identify trend. So it's either uptrend or downtrend. That's the only two things. You are using trend line to identify uptrend or downtrend. Okay, that's the only thing you are looking for. Number two, the trend line, when it is descending, should be drawn at the top. Okay, when it is ascending, it should be drawn at the bottom. Okay, so this is the correct way to draw a trend line. It should be drawn at the top. Why should it be drawn at the top? I will show you guys later when we move into TradingView. Okay, but these are the rules that you need to remember. Okay, so trend line is a very simple topic, but there are rules to every technical analysis. There's always rules, like how can you use something, okay? There's rules. So these are the rules you need to remember. It needs to be drawn in the correct direction. Okay, number three, it needs to have minimally 3 touches. 1, 2, 3, 4. This is valid. 1, 2, 3. This one didn't really touch, but we can kind of consider it 4, 5. Okay, 5 touches. This is valid. Okay, so the 3 things that we learn: trend is to identify downtrend, uptrend. It has to have 3 touches, and it needs to be drawn correctly. Okay, so far that's all we learned. The 4th thing, it's not really that important, but it's just good to keep it in your mind. It can be used on all time frames. Okay, any questions so far? It's very simple, right? Everyone's good with trend lines, right? Okay, thank you so much. Okay, cool. We're gonna move on to channels. Okay, so how do you use a channel? A channel is kind of like a trend line, except the channel is both on top and at the bottom. Okay, so the channel is usually parallel. That means it's the same angle. It's drawn the same angle. I will show you when we go to TradingView how to pull out your trend line. I'll show you how to pull out your channel. Okay, so the only rule, the rules for a channel is simple. It needs to have 4 touches, 2 on top, 2 at the bottom. So it needs to touch the resistance 2 times. It needs to touch the support 2 times. In this case, we can see it touched here. This one didn't really touch, but depending on how you adjust this channel, this here will touch. Okay, so 1 touch here, 2 touch, 1 touch here, 2 touch. This is a valid channel. It needs to have 2 touch on top, 2 touch at the bottom, and it is a valid channel. It needs to have 4 touches. Okay, the channel is same as the trend line. It is to tell you trend. whether it's going up or whether it's going down. Okay, the only difference with the channel is that you narrow down, okay, you narrow down where you think price is going to go. Okay, so that means when we plot a channel, we think price is going to move within this channel. Okay, we think, hey Mark, welcome to our webinar. Hey, sorry, let me adjust this. Okay, we think that price is going to move within the channel. So that's the only difference with a channel and a trend line. A channel narrows down where you think price is going to move. Okay. Okay, so putting them into a strategy, you can actually combine both the channel and the trend line together. You first plot a trend line, and then you plot a channel so that it narrows down. The channel will help you narrow down where you think price is going. That's how you combine both of it, and that's where you look for your buy, your sell, your take profit, your entry. Okay. Don't worry if you are confused. We will be going to TradingView to understand this better. Break and retest strategy. Okay, so this is an ascending trend line. You can see price breaking, retest. Usually a trader will get in here for the retest, and then they get in for the sell. Okay. Another example, this is a triangle strategy where it is a trend line on the upside and the downside. You can see that the triangle broke at the bottom, retest, and then here you enter for a sell. Okay, so that's all I have for trend lines and channels. We are going to go into TradingView now to practice identifying trend lines and channels, and I hope you guys are a bit more interactive so that I know if you guys are following, I know if you guys are getting the correct idea or not. Okay, so I'm gonna go to TradingView now. If you guys have questions, don't be shy. Please ask. Okay, the whole point of this webinar is to help you guys master technical analysis. I want to make sure you guys get technical analysis right, of course. Okay. Oh, what happened to my TradingView? Okay, never mind all this. I think I accidentally closed TradingView. Okay, everyone can see my screen, right? Okay, everyone can see my screen. I'm moving my mouse to see if it's working. You are sharing this screen. Okay, cool. Cool, everyone can see. That's the most important thing. Okay, so this is a setup that I found today. Okay, so this is one setup that I found today using Trendline. Okay, so I will show you guys how exactly did I find this setup. Okay, so first of all, I realized there was a trend line here. Okay, do you guys see this ascending trend line? Okay. I realized there was a break of that trend line. Okay, whenever there's a break of something, I need to confirm it. Okay, so I pull out things like Ichimoku. Ichimoku is an indicator that helps with trend. Okay, so I pull out an indicator that is used for trend identification. Okay, so I'm gonna pull out Ichimoku, and true enough, Ichimoku breaks the cloud as well. Price breaks the Ichimoku cloud. So this is double confirmation for me that trend is reverting and I should be entering for a sell. So using Trendline, you will be able to find setups. You'll be able to find your entry, your stop loss, your take profit. Okay. Okay, just give me a moment, guys. I think the screen sharing has a problem. It keeps. Okay, is it better? Okay, let me try to screen share again. Sorry, it just keeps saying that my screen sharing is paused. I don't know why. Share screen. Just give me a minute to figure this out. Don't know what's going on. I don't know why. Okay, guys, I need to turn off. Just give me a minute. Okay, I think should be okay now. Everyone can see my screen again? Sorry, the screen, Zoom keeps saying that my screen is not sharing. Okay, so I think it's sharing now. You should be able to see GBP CAD. Okay, so I'm gonna show you guys, this is a practice session. So I'm gonna show you guys how to identify trend. Okay, we're gonna identify trend line. So we're gonna get rid of this. We're gonna start with a clean slate. Okay, I already gave you the answers to this one, so you already know that price is moving in an uptrend. Okay, and this is how you draw the trend line. Okay, there's two ways to draw this trend line actually. A trend line needs to have at least 3 touches. Okay, so in this case, 1 touch here, 2 touch here, 3 touch here, 4 touch here, and then the breakout on the 5th touch. Okay, so this is a valid trend line. Okay, this is how you identify trend. And if you pay attention, you will be able to see a channel as well. You guys see the channel? Depending on how I draw the channel, it can touch even more times. Okay, so a channel, can you guys let me know in the chat box? I just want to make sure you guys are still following and still understanding what I'm saying. Do you remember for a channel, how many touches does it have to be? Okay, thank you. Thank you, Brian. Yes, so a channel, you would need 2 touches at the bottom, 2 touches at the top. Okay. So in this case, you've got 1, we'll consider it barely touch, 3, 4, and 1, 2, 3, 4 touches. Okay, so this is a valid channel. Okay, and we can see price broke the channel and it came and retest a channel, and here you enter for a sell. Okay, I'm not going to show you guys too in depth. The whole point of today's webinar is to identify channels and trend lines. Okay, so I'm going to delete all this. We're going to go into a different chart. Okay, so it works the same for all chart. It works for Forex, it works for commodities, it works for index, it works for cryptocurrency. Channels and trend line works for all kinds of instruments. Okay, so let me delete this. Let's try gold, for example. Okay, I'm going to get rid of this. Can you guys let me know if you see a channel or a trend line in XAU USD 4 hours time frame, and is it going up or down? I just need a little bit of interaction so I know that you guys are still following me. Okay, it's going up. Okay, it's going up. There is a channel and there's also a trend line. Okay, so thank you, Brian, again. There is a ascending trend line here. Okay, so there is 1, 2, 3, and 4 touches. This is a valid trend line. Okay, on top of that, there is a channel here. You plot your channel here. Okay, for those who are still a little confused, where do you find your channel? You go to this cross. Under the cross, you click on trend line tools. You click on parallel channel and you can use the channel function. Okay, if you want a trend line, it is the first one here. Okay, so for a channel, remember we need 2 touches on top, 2 at the bottom. We've got 2 on top, 1, 2, and 1, 2, 3, 4 touches here. Okay, that means this is a valid channel, and that means we expect price to continue moving within this channel. Okay, that is the whole point of identifying a channel or a trend line to begin with. The whole point is to narrow down where you think price is going. Okay, any questions so far? We're going to go practice on a different chart. Okay, let's try BTC. Okay, so this market is kind of moving sideways. Actually, I do kind of see a slight triangle here. You see the triangle. Price is kind of moving within a triangle. Okay, this is not the best. Whenever I'm plotting a triangle, I would like to have 3 touches. So in this case, there's only 2, 1, 2, and 1 and 2. Okay, I think for a triangle, it's best to have 3 touches. But in this case, there's only 2, so we shouldn't consider this triangle too much. Let's try a different pair. Let's try USD JPY. Okay, I don't see a triangle here, but I do see a channel. Oh, what's going on? Oh, what's going on? Okay, let me refresh. Okay, let's try EUR/USD. You need to, whenever you're drawing a channel or a trend line, you always need to ask yourself the first question. Okay, question number 1, is it going on an uptrend or a downtrend? Okay, if you answer uptrend or downtrend, you would have won half the battle already. Okay, so in this case, when I look at EUR/USD, I immediately see an uptrend. Why is there uptrend? Because price is moving, making higher highs, and higher lows. Okay, so this is definitely moving in an uptrend. Okay, so once I have identified whether it is uptrend or downtrend, I can now draw my channel or my trend line. Okay, so I'm going to try to draw a trend line. Remember, a trend line, 3 touches. Okay, this one barely touch, but I will consider it. Okay, so 1 touch, 2 touch, barely touch, I think we can consider, and this is the 3rd touch where price is currently at right now. If you can't draw a trend line, do not force it. Okay, if there is no 3 touches, do not force it. Like that one just now feels like it was a bit forced, right? Okay, don't worry about it. You just need to readjust or draw it differently, see if you can draw it differently. Okay, so now that I draw it differently, this is a bit more valid to me. There's 1 touch here, 2 touch here, 3 touch here, 4 touch here, and then on the 5th touch, it breaks out, okay? It breaks out. Okay, so if I plot a channel, I'm going to try my best to plot a channel. If I can. Okay, so this is the channel that I can come up with. That means I have a bias that price is going to move in this channel. Okay, so this channel has 2 touches at the bottom and 2 touches on top, making it a valid channel. Okay, remember, it just has to have 2 on top, 2 at the bottom. Even if you just pull it out a little, it will have 3 touches. Okay, so see, 1, this one barely touched, but that's okay. It's really how you adjust it. A lot of times with a channel and a trend line, it's really how you adjust it. Okay, don't worry so much about it, but the whole point is as long as it's not cutting through a lot of body, that's fine. Okay, so 1 touch here, 2 touches here, 1 touch here, and the 2nd touch. Okay, so this is a valid channel, and we think that price will move within this channel. Okay, cool. Now that I have identified my trend and my channel, I am now, everyone good with the practice session? Should I move on already? Or do we need to practice on more charts? Can you guys let me know in the Q&A box or the chat box, or give me a thumbs up or something? Should I move on already, or should we practice looking for more channels and trend lines? Okay, we can move on. Okay. Okay, so after I find my trend, okay, I'm now going to show you guys how to combine technical analysis, okay? Sorry, it's a little warm here. Okay, so now that I found my trend, the next thing I'm going to do is look for support and resistance. We are now going to combine whatever we learned today with our normal style of looking for a setup, okay? So we always want to identify support and resistance by looking for the closest swing high and the closest swing low. So the closest swing high I can find is here. And the closest swing low I can find is here. Okay, and this swing low will connect nicely with this area, this swing high here, and this swing high here. Okay, so I would say this is a significant area of support. Okay, everyone good for now? Okay, now that I have identified my support and resistance, I'm going to mark it clearly. I'm going to mark this very clearly. Okay, so there's one way you can mark it. You can double click, go into text, and you can type first resistance or your resistance, whatever you want to type. Okay, as long as it identifies that resistance. And I usually put it as red color. So in my mind, I know that red means resistance, green means support. Okay, so I'm going to go into here. I'm going to type first support. I'm going to change this to green. Okay. So that I know that this is my support resistance. It is super important to keep your charts clean. Okay, so when you look at your charts have to be clean at all time, clean and tidy, and it shouldn't be messy. Okay, it should be clean and tidy at all times so that you don't get confused. okay, so that you yourself don't get confused. Okay, so one more thing I do notice is that there is a smaller channel here. Okay, I'm going to bring that in because this may be a possible movement for EUR/USD. Okay, do you see that there is a smaller channel moving here? Okay, I'm going to get rid of this and we're going to focus on the smaller channel here. Okay. Okay, cool. Now that we have found, so from all the information that we have found, now the whole point is just to collect data and then make a decision from data. So what information have we collected? Number one. Okay, number one, the first data that we've collected is that price is moving in an uptrend. Okay, why? Because of the channel. Okay, so when price is moving up, should you be buying or should you be selling? Can you guys let me know in the chat box or the Q&A box? If price is moving up, do you want to enter for a buy or do you want to enter for a sell? Okay, thank you. Thank you, Aisha. Thank you, Bri. Thank you, Joash. Thank you, Mohammed. That's right. You want to enter for a buy. Why? Because you want to follow trend. So it's the same. If you go to the beach, if the waves is pushing you this way, you want to follow the waves. You don't want to go against the wave because going against the wave is going against momentum, right? So I'm not saying that if price is going in uptrend, you cannot sell. You can still sell, you know. You can enter here for a sell. You can take profit here. You can. But it is safer. It is safer if you follow the trend. Okay, it is safer if you follow the trend. Okay, so we have identified that price is moving an uptrend. We have identified the support and resistance. This support and resistance will now act as your take profit and your entry. So this resistance is where you think price is going to go to next. Why? Because price is very attracted to support and resistance. Support and resistance are like key levels. Okay, it's like a magnet. So you just have to think about it as a magnet. You have to think of price as a magnet. It is always attracted to the support and resistance. So depending on the momentum, if the bullish momentum is strong, then obviously it will be attracted to the first resistance. If the bullish momentum is not strong, if the bearish momentum is strong, then obviously it will go to the first support. Okay. So usually what price does is it does this, okay? It moves in waves. It's moving in waves. Okay, every time it moves in wave, it breaks, it comes back and retests. Okay, do you realize that price keeps coming back to this aim area? Price keeps coming back to this support area. It has come back to this support area 5 times already. 1, 2, 3, 4, 5. Why? Because like a magnet, price is attracted to this first support area. It is attracted, it has come to this first resistance area 2 times already. 1, 2. Okay, it is attracted to the support and resistance. And that therefore, your support and resistance will act as number one, either your entry, okay, or your take profit. Okay. Never put your stop loss at support and resistance, because if price is attracted to the support and resistance, that means it will go to your stop loss because it is attracted to that area, right? So it should always be your entry or your take profit. That means when price comes here, it might bounce off, and here you enter for a buy, okay? Or when it reach here, it might reverse, okay? Here you enter for a sell. Okay, that's why identifying support and resistance is super, super, super important in trading. I know a trader who only used support and resistance. I think he used other things as well. Okay, 90% or 80% of his strategy is using support and resistance. On a monthly basis, he makes more than 100,000 US dollars. okay, just using support resistance. So identifying support resistance is super, super, super crucial in trading, okay? This is, one thing you want to master in trading, it is identifying support resistance. You need to train your eyes to see where's the support, where's the resistance, where is the best support, where's the best resistance, okay? That is super important. Okay, now that we have identified our trend, we've identified support resistance, I am now going to teach you guys to combine Fibonacci levels. Okay, if you are new here, this is going to be a bit confusing for you. Okay, if you are not, if it's confusing for you, don't worry, just try your best to just listen and follow through this. After practicing a few times, after many, many times of practice, you will be very used to what I'm trying to tell you, okay? Okay, so I'm going to use Fibonacci levels to see how strong this support is, okay? After I've identified support resistance, I need to measure the strength of the support resistance. Why? Okay, why? I know that price is attracted to the support resistance. It will either go to the support or it will either go to the resistance. Okay, I'm not sure yet. Okay, I know it is attracted. The question is, when it reach the support, is it going to break or is it going to bounce? That is the question. That is the next question. Okay, because if it's going to break, I will enter for a sell. If it's going to bounce, I will enter for a buy. Okay, that's why I say your support and resistance will always act as your entry and your take profit. Okay, it will either be your entry or your take profit. Okay, but you need to first identify the support and resistance. Okay, so how do I measure the strength of the first support? I use Fibonacci. Go to this one, the third one. 2 under the cross, Fibonacci retracement. I'm going to plot some Fibonacci levels and see if there are any levels that lines up at the first resistance. So a very, very strong support and resistance will have a lot of Fibonacci levels lining up in the exact same area or zone. Okay, so we can see that the 38.2 is super near to our first resistance, which is telling us that, okay, there is some strength in this first support. I would much prefer if the levels line up just on top of the first support, but it doesn't work like that all the time. So let's see. Okay, I'm going to get rid of these levels. I'm going to get rid of all the levels that are not relevant to us, okay? So 0 is not relevant to us right now. 100 is not relevant. Only 38.2 is relevant because it is nearest to our first support. So I'm going to get rid of everything else that's not relevant so that our chart looks clean and tidy. I always want the chart to be clean and tidy. Okay. Okay, now I'm going to look for Fibonacci projection. Okay, very good. I see 100% Fibonacci projection lining up exactly on top of the first support. I'm going to get rid of the 0. I'm going to get rid of the 61.8. I'm going to get rid of the 78.6. I'm going to press OK. Then we can see that, yes, definitely at the first support area, there is strength. There is resistance at the first support. That means when price gets here, okay, you must be wondering why price can get there if that means you have to come up from the channel. But you can take note that this channel should only be used as a reference, okay? You should only use it as a reference. Okay, this channel could have been drawn this way as well. Okay, it could be drawn this way as well. Price can come here, reverse, and this channel will still be valid. Okay, so that's why channel should only be used as a reference to finding trend. Okay, you shouldn't be too obsessed with like the lines of the channel. Be like, oh no, price cannot come here, because if price comes here, then this channel is not valid anymore because price would have broken this channel. Okay, no. Okay, it is just a guide of where you think price is moving to. Okay, so I think price is going to come here, bounce off here, and come back to the first resistance. Okay, that's what I think is going to happen. That's what I think it's going to happen. Okay, so why? Because I've identified that there's a support here. The support lines up nicely with this 100% Fibonacci projection. It lines up nicely with this 38.2 Fibonacci retracement, not perfectly, but at least it's nearby. Okay. What else do I see? Okay, let me pull out indicator. Okay, it would line up nicely with the support of this Ichimoku cloud. Okay, so the cloud of the Ichimoku works as a support and a resistance as well. So it can come here, bounce off, and continue up. Okay, so everything looks like it's lining up perfectly. I'm a bit biased for this buy for EUR USD. Okay, because of this, I'm very biased to get in for a buy for EUR USD. Okay, that's exactly how you would use a channel and a trend line to help you identify where to get in. Okay, what about stop loss? Okay, where would I put my stop loss? I would put my stop loss here, just below this area, okay? Because this is the area. Okay, I'm gonna get rid of the Ichimoku so that it's not confusing. This is the area where I think price is gonna reverse off, right? Okay, so this is the area of support. That means this is the area that price is attracted to. That's where the magnet is, okay? So I want to avoid this magnetic area. I want to go down slightly. So I'll put my stop loss here so that when price gets here, it comes here, it reverses, it misses the stop loss and it goes up. Okay, if I am wrong, if price doesn't reverse here, instead price does a breakout, it breaks out, then it will hit my stop loss, and that's okay. It's okay to hit my stop loss. Okay, that's the whole point of a stop loss. The stop loss is to protect you when you are wrong. Okay, that's all that it is. Okay, so I'm gonna put this as stop loss, buy entry, take profit. Okay, so this is exactly my analysis for EUR USD. Okay, this will be my analysis for EUR USD. If I'm wrong, it'll hit my stop loss, and that's totally fine. If I'm correct, it'll hit my take profit, and I would have made okay, because I'm always risking 1%, I am only risking 1%. Okay, if I'm wrong, it'll hit my stop loss and I lose 1% of my entire account size. Let's say my account is $100,000. Okay, I lose $1,000 maximum. That's the most I can lose. Okay, but if I win 2.71%. Okay, so I'm risking $1,000 to make $2,710. Okay, so I think the risk to reward is good. I think it is worth it. I think this is a trade that is okay to be taken. Okay, so what's the next step? Next step is once you have found your analysis, right? Once you have found your analysis, the next step is that when price gets here, okay, when price gets here, what you're gonna do is to look for reversal pattern candlestick. Okay, a reversal pattern candlestick. When price gets to this area, usually, not all the time, but usually a reversal pattern candlestick will appear, and that is your confirmation to get in for the buy. Okay, if it does not appear, do not get in for the buy. Okay, so what does a reversal pattern candlestick look like? These are some of it. We have the hammer, the hanging man, the bullish engulfing, bearish engulfing, piercing line, dark cloud, inverted hammer, shooting star, morning star, evening star. Okay, you will see, if you see just any one of this, just any one of this, you can enter for your buy. Okay, that's exactly how you make money in trading. Okay, this is how you will be profitable in trading. by following a set fixed rules. Okay, everyone okay for now? Okay, I have 10 more minutes with you guys. I am just going to look at one more chart and then we're gonna call it day. Okay, so let's look at, I do want to look at GBP CAD, but it looks like price is already on its way. Yeah, price is on its way to the take profit. Okay, let's look at AUD CAD. Okay. Give me a moment. I'll tell you why I'm entering for a sell for this. Trend line breakout. Okay, kind of like a forming channel there. Okay, cool. There is kind of like a slight downtrend. There is a slight downtrend here. Okay, so I do think that price is going to go down. It's just that I think there's going to be two entries for the sell. Sell. Okay, the first entry I think it's going to be here. It's going to be this range. Okay, but this is a very huge range. But I do think this is the sell entry for AUD CAD. Okay. So I was talking to you guys about reversal pattern candlesticks a while ago, and I do see price kind of forming a reversal pattern candlestick already. Okay, I do see that price is kind of forming like a I want to say this one. Okay, so it's kind of forming like a spinning bottom, which is a kind of reversal pattern candlesticks or kind of uncertainty candlestick. So if this candle closes like this, okay, I would think this area is a good entry for the sell. Okay, let me just back this up with. Okay, there was a trend line breakout recently. Okay, so there is some bearish momentum. We can see that there is bearish momentum here. Okay, we see bearish momentum because there was a trend line here and price broke out of that trend line. Okay, we see another trend line here, kind of moving in downwards. Okay, so I do think that there is bearish momentum and bearish pressure right now. I do think this sell is possible. We just need to wait for this candle to close. If this candle closes like this, I think it's a good sign to enter for a sell, okay, within this zone. Okay, so I think this is a good selling opportunity for AUD CAD. Okay, any questions? Anyone still confused or any questions at all? What other indicators? Okay, so I've got a question here asking what other indicators can I use to identify trend? Okay, so One other indicator that I use, I love to use Ichimoku. Okay, so I'm going to show you guys how to use Ichimoku. I'm going to delete this. I'm going to delete, turn off some of the settings so that it's not so messy. Okay, the only important thing that I like to look at for Ichimoku is number one, the plot background, which is a cloud. Okay, if you get rid of the plot background, you won't see the cloud anymore. So you need to click on the plot background, and I like to use the conversion and the baseline. Okay, so there's two rules that I follow with Ichimoku. Number one, if price is moving above, just give me a moment. Okay, if price is moving above the Ichimoku cloud, like this, it means it's on an uptrend. Okay, if price is moving below the cloud, it means it's on a downtrend. Okay, so based on Ichimoku, it's already showing that price just broke the cloud and there might be bearish momentum. Okay. Okay, the second thing you want to look out for Ichimoku, if this baseline, okay, the conversion line, which is this blue line, okay, so one of it is called the conversion line and one of it is called the baseline. If the blue line is below the red line, it means that it's a sell. Okay. If the blue line is above the red line, like in this example here, it means that it's a buy. Okay, so we can see, like from the past, whenever the blue line crosses the red line to the downside, you can see that there is bearish momentum. You can see that the bullish momentum is losing strength and the bearish momentum is gaining. Okay, so this blue line and this red line kind of works like some kind of moving average. Okay, so it is just a double confirmation when you are using the Ichimoku cloud. Okay, so you can see that the blue line crossed the red line again. Here, a trader will enter for the buy. They take profit here when the blue line crossed the red line. Okay, so that's one indicator that I use for trend. The other one, I don't really use this for trend. I use it to look for divergence. Okay, it's the RSI and the stochastics. Okay, I'm going to show you guys what divergence is. Divergence is when on the chart, this is the chart, okay? This is the indicator. These two are indicators, these are charts. On the chart, price is going up, okay? But on the indicator, price is going down, okay? Let's give me a moment. Okay, you need to measure the same, oh, what happened? Okay, you need to measure following the same area that you took this line from. So if you drew this line here, take a vertical line, plot it here. Okay, this is where we, okay, you need to see if price is going up or down. Okay, if price is going down, even though on the chart it is going up, this is RSI. RSI, the indicator's way of telling you that, hey, this trend is not the real trend. This is a fake trend, okay? There is a bearish divergence and there is a chance that price is going to go down and there will be a trend reversal, okay? So I don't really use RSI or stochastics to look for trend. Rather, I try to use it to tell me if there's any warning that the trend is wrong. Okay, so in this case, trend is correct. Okay, I'll show you guys an example where the trend is not correct. Okay, there are cases where price is going down like this. Okay, price is going down. Okay, but on the RSI and the stochastic, price is actually going up. Okay, not just follow the one that I draw. Okay, pretend that price is going up. Okay, if that is happening, This is RSI and stochastics way of telling you, hey, this trend on the chart is a fake trend, okay? There is a chance that price is going up, okay? And that is called a divergence of what truly is happening, okay? So that's all I have for you guys today. I hope you guys learned something. I think trend lines and channels are super, super important. Combine it with support resistance, you are going to get a lot of very good setups. You're going to make a lot of profit, okay? So do practice on identifying trend lines and your channels, and do practice identifying your support resistance, and it will really help you in your trading. Okay, so I will see you guys again next time. Thanks for attending our webinar today. Bye everyone. Thank you so much. Thank you, Mark. Thank you, Joyce. Thank you, Muhammad. Thank you, Bride. Thank you, Aisha. Thank you, Carlos. Thank you, Joyce. Thank you, Tuan. Thank you, Best. Thank you so much, everyone who joined. I will see you guys again soon, okay? Cheers, everyone. Merry Christmas and Happy New Year.
Hello, my name is Christina and welcome to another educational video. The terms mine and yours were used by traders on the trading floor to signal buying and selling of securities. The term mine was a buy reference, while yours was a sign that an individual wants to sell an order. These terms were used with other similar terminology in the open outcry system. This system refers to the trading pits before 2010, where traders used verbal communication along with hand signals to convey trading information. In these marketplaces, large group of dealers and brokers engaged in competitive buying and selling. The words mine and yours were used to express the intention to buy or sell, respectively. Both buy and sell were also common. For instance, a dealer in the interbank market might type or speak mine to a counterparty of broker if they wish to purchase a specific currency. The trader will say yours, signifying it's yours if they were to decide to sell. In the same way, if a floor broker offered 100 call option as $1 each and a market maker decide to purchase them, they could respond by shouting mine to indicate their intention to do so. Both of these words were used to enable quick and precise transactions in a market that was frequently chaotic and active. Today, the words mine and yours are both still frequently used, mostly in the Forex market. Additionally, they continue to be employed in the same context as they did under the open outcry system. Thank you for watching.